Trade union SIP2 says it's satisfied fruit of the loom jobs are secure in short term. Fears of worldwide stock market crash ease as shares rally on Wall Street, and thousands prepare to evacuate Montserrat amid fears of volcanic eruption.
A very good evening. The ISEC index of Irish
Shares dropped by almost 2% in trading today, but a
rally in share prices on Wall Street has eased fears of a stock market crash. There were concerns that large reductions in share
prices in London, Dublin and New York on Friday could signal the start of a downward trend. But with Wall Street holding steady, analysts believe the fall in share prices here was simply a case of the market correcting recent gains.
International share prices have been surging ahead in recent times, raising fears that stock markets could be heading for a crash. Those fears were given some credence last Friday when almost £22 billion was wiped off the value of shares in London, the second biggest fall since Black Friday in October 1987. New York saw a 3% drop on Friday, while Dublin also saw a fall in the value of shares of 1%, a loss of £400 million. The downward trend continued early this morning when Asian markets were the first to open after the weekend. In Tokyo, the Nikkei average fell by 1.5%. This morning, as the world waited for New York to open, shares fell in Dublin and London. But most analysts believe the turbulence is simply due to the market correcting previous gains.
The Irish equity market was up about 20% in 95, it's up another 20% in 96, and even after the recent correction is up over 30% year to date in 1997. So the moves we've seen on Friday and again this morning are pretty small in the context of the huge gains that have been realised over the last couple of years.
The optimists say it's as simple as the fact that the markets are up a huge amount already this year. Some stock markets are up anything up to 50% this year, others are up maybe 25%, and say that anything that goes up that far, that fast, will inevitably come back a little. On the other hand, the pessimists say that the markets went up a lot last year, they went up quite a lot the year before, and by going up again so far this year, that they were asking for trouble, and that this is the beginning of a significant fall.
A drop in the New York Stock Exchange could have triggered further falls elsewhere, but once Wall Street opened, it quickly became apparent that the optimists were in the majority as the Dow Jones Share Index held steady. The Dublin Stock Exchange closed down nearly 2%, but analysts believe that as long as Wall Street remains calm, this could be the worst the stock market will suffer.
Thousands more people on the Caribbean